Alrighty, folks, I want to share a tweet or an X or whatever the heck we're calling these things from Nicky Leaks. Yes, Nicky Leaks. I am copying Meet Kevin's nickname for Nick Timmeros, a Wall Street Journal article or writer who appears to have the inside track to what's going on with the Fed. Taylor, you ready for this?
I'm ready. Well, I'm not ready because I don't know what's coming, but we're going to do this regardless of whether I'm ready or not.
Dance. You're getting ready to dance. Okay.
Let's do it.
So the title of the article, if you want to go look it up, it is An Important Shift in Fed Officials' Rate Stance. So here's the tweet from Nick Timmeros. It came yesterday. Fed officials are turning more cautious about raising rates too high now that inflation is finally showing signs of rapid declines that they long anticipated. A rate pause in September will give the Fed more time to see if recent progress continues. So it's the first time you've seen that or heard that. I'll let you react to it first, because I think there's a critical component that most novices will miss.
Yeah, I don't know that I see rapid deflationary pressure as of recently, or disinflationary.
So I might be wrong on that.
Right. So the core thesis behind this, I might argue it to begin with. And then the second part is, I don't know if you get a synonymous echoing from Fed officials that they're comfortable with where inflation is. Like, I'm not sure that I'm hearing that out of them. Are you?
Well, it's the beauty about Fed officials is we're starting to see disagreements.
Right.
Right. For the last 16 months, everything's been unanimous.
Higher. Yeah.
Higher. Right. And inflection points always bring disagreement. So I would say it's probably 70-30 right now, kind of dove hawk. If you look at it, maybe 60-40, but probably 70-30.
Okay.
Obviously that could change with one number, right? The number that comes out Wednesday, if it's 3.7 as you expect, that could wake people up. That could be a problem.
Certainly.
But let me tell you the line in this that I think is subtle, but has underlying huge implications. And again, I overread, interpret all the time. So
that's what we all do.
Yeah, exactly. What is he saying between the lines? All right. So here it is. The Fed officials are turning more cautious about raising rates too high. So that's the line.
Yep.
So let's rewind the clock.
Yep.
I don't know, for the last 4 or 5, maybe even 12 months, the Fed has basically been saying, if we go too high, we know how to fix that. That's basically what they've been saying.
Yep.
What I think they're saying with this line now is, oh, shoot, we have so many other things starting to crack: banking, lack of lending, commercial real estate, all these other things. We're not sure if we can fix these things with lower rates. So we should be less aggressive. We should give it more time. We should let the lag effects roll. So I think that is again, assuming Nicky Leaks has an inside track to Jerome Powell and the bat phone, I think that line is critical.
Yeah. Nicky Leaks, I looked up his face too. He's at every Fed presser and asking a question in every single one of them. And he's an intelligent guy. I don't disagree that I think, and we've been talking about this for a while, that there is going to be a much more significant impact from what's going on from the banking industry and the cracks that we're seeing there than what has played out thus far. But I also look at things from a broad standpoint and say, if we look at GDP numbers right now, I'm not sure the Fed looks at GDP and says, yeah, we're really getting the slowdown that we're looking for here. Like
5.6.
Yeah, 5.6 is what, the Atlanta Fed now, or I'm sorry, Atlanta GDP now is saying. And so, it's really easy. We're in one of the most confusing economies there's ever been. Like, I legitimately think that. You look at the backdrop and say, we've raised rates 5.25 on one side, and you have cracks starting to show through on banks. Banks are openly admitting that they are not going to be willing to lend as much moving forward, and they're already not lending as much. So that's a meaningful slowdown. You have mortgage
rates. You're going to lend less than zero? What
right. Right. You have mortgage rates topping 7%
for a month, 4 weeks in a row.
You haven't seen a fall off in housing prices because there's such a lack of demand in the market. Supply. And then on the other side, you have the economy taking a step back and saying, holy smokes, we're seeing whatever you want to call it, 3% GDP growth, 4% GDP growth. If you believe the Atlanta Now report, you're looking at 5% GDP growth, 5.5. It's like, how do all of these things simultaneously play out? And what is it that the Fed is looking at most closely? And obviously, right now, you're having the Fed look most closely at inflation, because unemployment, although it ticked up last month, last month, you have it relatively tame in general. And inflation is the thing that, we're getting that print later on this week, and we'll see if Nicky Leaks is right. I tend to disagree with him.
Yeah, and that's wonderful. I obviously Peter Schiff is a perma bear, gold bug, whatever you want to call him.
Yep.
But I read an article from him just to keep balanced. He is out saying that the Fed, and actually there's somebody else that said this, and I forget his name. Maybe I will remember, but the Fed must go higher, must go much, much, much higher. We're not restrictive yet. How does that kind of just generally feel? And let's put a number on much higher. We're at 5.25. Let's say they have to go up 100 basis points.
Yeah, I've read similar takes on 100 basis points higher. I don't think there's any argument that we're at a restrictive point or darn near a restrictive point right now. The real rate is right now saying that we are restrictive, right? So I don't think that there could be an argument that we go significantly higher. I don't care whether we go 25 basis points higher or not. I look at next year and say, right now, the market's pricing in 4 rate cuts next year.
Still 4 cuts.
Wow. Still 4 cuts. And so you say, like, right now, rates sit at 5.25 to 5.5. They're saying by the end of next year, 2024, we'll be at 4.25 to 4.5. And so with the economic output in the direction that seems to be leaning, which is this reacceleration direction, that says the Fed has to get on the brakes and break something and then have to potentially make up for it on the other side. I don't see how those two things can square each other otherwise. Something has to break in order for us to get 4 rate cuts next year.
Well, let's talk about the market, because I think the market for the last 12 months has been generally, I don't know what you want to call it, optimistic or wrong, right? They've been pricing in a lower Fed for seemingly 12 months now, right? And the Fed's been trying to yank it higher.
Correct.
What does the market say about rate hikes the rest of the year? Is the market pricing in one?
They got about a 50% chance that one more comes this year. It's a little less than 50-50. They think that we will be flat most likely, but there's not too much of a leap to say that one comes.
Yeah, and it that will meaningfully change Wednesday, I would think.
Correct. One way or the other. Totally agree.
Yeah. Okay. And then their first rate cut, is it still June?
The first rate cut. You know what? Good question. I don't know that I have the date on that. You could very well be right in June, and then it just goes bang, 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 bang.
Bang, 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 right? Yeah. Yeah. Okay. Yeah, it's this is an important, I really do think that the Fed for the longest time has been hawkish, saying, hey, we're going to go higher, and if we break something, we know how to fix it. I think they generally believe that. I think what they're looking at now, underlying the economy and the impact of 500 basis points in 13 months or whatever it's been, they're like, holy shit.
Yeah.
There's a lot of things that we can't fix with rate cuts. The banking system, we talked about consolidation, could light it on fire. The commercial real estate, I mean, I talked about a Chicago trophy property. This is from memory, but it's pretty telling. If you want to see it, I think I talked about it on the Daily Financial News on Sunday or Saturday. There's basically a building that traded in 2018, roughly speaking, $750 million. The underlying loan was, let's call it 580. So they put about 30% of equity in. 5 years later, right? Commercial real estate needs to be reevaluated. New value, 460. 30%, assuming you could get a 70% LTV loan, which you can't today, but let's just pretend. It means you have a cash in refi of $240 million for a trophy property in Chicago. And if you want to look it up, it's the Aon Center.
Yep.
They're looking at stuff like that going, we got a problem. And oh, by the way, the other thing that's going on is somebody's taking a haircut. There's an insurance company, there's a pension, there's a 401k, which was the equity that's now gone in an instant.
Yep. And I think that is a real problem. There's no doubt about it. I do think that problem is more short-term in nature and not as systemic as what the market is implying it to be.
Well, no, let's talk about that. But no. So I think you're right at the transaction and the people and all of that. But once that loan gets reset, the equity is gone and can never come back.
Oh, no argument there. No argument there. I guess what I'm saying is the perpetuating of commercial real estate prices lower, I think, is not something that plays out
No.
forever. And I think
Oh,
there
agreed.
are
Agreed.
multiple reasons for that. One is things get overcooked on both sides.
Yeah.
And I think they're probably close to getting overcooked right now in the negative direction. And
Sure.
two is I think that governments will start to understand that they need to loosen up their restrictions. And what I mean by that is we have a housing problem throughout the United States right now. And so we need to have these commercial properties be able to be converted into residential. Like we
Yeah.
can't be idiots here and say, hey, we have a massive problem here and a massive problem here. These two problems solve each other, but we're going to divide them. Like
Yeah.
that's
The whole
stupid.
office to resi conversion. Yeah.
Yeah. And I get that there are problems, and I get there are things that there are hurdles that have to be overcome in order to do this stuff, but like let's not regulate ourselves into an economic gridlock when two problems can be fixed with each other.
Yeah. This is going to be real interesting, folks. There's a lot of complexities going on. We're going to keep talking about this each and every week. Taylor, where can people find you?
Yeah, find us at Life Goal Investments. We're on both Instagram and on TikTok with daily stuff.
Awesome, buddy. Thank you so much.
Thanks.